Hey all, welcome back to another CEO on the Lobster. Janine is still away, so you're stuck with me this week. Last week we saw a really interesting trend in the market. We saw the market shoot up, bounce around a little bit, then drop straight back down. And this is what I'm affectionately calling the Bart Simpson market, because it looks kind of like his haircut. And you may have heard about the reasons why this happened, but they're generally encapsulated into Bitcoin ETFs. So what is a Bitcoin ETF? Bitcoin ETF is an exchange traded fund. It's kind of a pooled investment security. It's very much a security. It's very much a part of the traditional finance world, and it tracks a particular index, stock, commodity, something its value is kind of based upon. And what makes them really valuable compared to a normal fund is they can be exchange traded, so they can be traded on a stock exchange. We've been seeing lots of interest with Bitcoin ones at the moment. So we're going to do a little bit of history over where these Bitcoin ETFs have kind of come from, about Grayscale, which is kind of the main one because they've got a really interesting story, and about what this potentially means for the market. So to make a start, Grayscale runs this thing called the Grayscale Bitcoin Trust, the GBTC. Don't know where the C comes from, but it's there. It was originally known as the Bitcoin Investment Trust, or BIT. It was launched in 2013. Back in these days, it was a lot harder for people to hold Bitcoin. This was in the days of like Mt. Gox. Wallets were kind of a new thing, something people weren't very familiar with. Institutions weren't going to hold it themselves. So this was a way of people getting exposure to Bitcoin without actually needing to hold Bitcoin, if that kind of makes sense. And this was primarily aimed at financial services companies, people that were wanting to speculate on Bitcoin without wanting to touch the crypto world too much. When it launched, it had a really limited supply. And also, importantly, it wasn't an ETF. It wasn't traded on any stock exchanges. You couldn't just go out and log into whatever trading app you had and buy or sell it. You had to do it via a broker in this thing called the OTC market, or the over-the-counter market. Would recommend looking into it, not what the topic of today's video is going to be about though. Initially it traded at a huge premium, something like 10 to 15 times the value of what the underlying Bitcoin in it was worth. The original idea was that one share in this Bitcoin trust was worth one Bitcoin, right? So the total value of the trust was worth the same as the total number of Bitcoins that were held by the trust. At the time though, this wasn't really the case. There was a lot more interest in the product than there were in the underlying Bitcoins, and thus it cost you more to buy a share in the trust than it did for that Bitcoin that the trust represented. And lots of people saw this as an arbitrage opportunity, a way that they could make money. They could buy Bitcoin for X price, deposit it into the trust, and then when their cash out period kind of occurred, they could cash it out for a profit. They could sell their Bitcoin trust shares to somebody else for a higher profit than what they had paid for the underlying Bitcoin to create those shares. That worked great until it didn't. It got so popular that that premium essentially eroded. More and more people were investing in the Bitcoin trust to get a benefit of this premium, that now the Grayscale Bitcoin Trust is actually worth less than the Bitcoin they hold. They hold Bitcoin that's worth X amount, but the shares themselves, the sum of all the shares they hold, is only worth Y, which is not quite half of what the Bitcoin they hold is worth. And one of the main issues that caused this was that people could turn their Bitcoin into shares in this trust, but they couldn't do it the other way around. It was only one-dimensional pressure. This was actually intentional by Grayscale. It was a really smart move. It was a little bit unethical, but it was a really smart move, because it meant that the funds in the trust could only grow and grow and grow. There was no way to get them out, essentially. And that whole time they were taking that 2% fee. They made a lot of money off it, and they still do. The Bitcoin Trust did allow redemptions really early on, and they had a court case with the SEC related to people being able to redeem them outside of a lockup period. It really is kind of a bit of a misleader, because Grayscale was the one that decided to stop offering redemptions. And all the stuff we're seeing with this ETFs at the moment have nothing to do with redemptions. It has nothing to do with closing that premium gap that we currently see where people are buying Bitcoin Trust shares for less than what that Bitcoin's worth. That is completely off the table and work. They're very clear. Why they've been in the news though recently, and this is moving away from a little bit of history, is they actually received a pretty big win with the SEC about converting their trust shares, as we previously mentioned, a traded OTC over the counter, into a Bitcoin ETF. Originally, the SEC, the Securities and Exchange Commission, which is very firmly the authority on this matter because they want to make it an exchange-traded fund. So the Securities and Exchange Commission definitely has authority here, rejected their application. Grayscale turned around and said, well, why'd you do this? And the courts have actually agreed that the SEC really didn't explain why they said no to it, especially when they've listed very similar products. So it seems very much like a non-equal application of the law, which is a really important concept. Laws apply equally to everyone. So the court vacated the commission's orders. It doesn't mean that their filing's approved, but it's the SEC will have to very much do everything properly, and unless they have a really good reason to say no to it, they can't. They could still approve the decision, it's not closed. And what kind of caused that downward swing? Because the upward swing was caused by Grayscale had this huge victory in court, but what caused this downward swing is the SEC then turned around and said, okay, cool, well, we're going to play the clock out. There's a few ways that they can kind of run the clock out on these kinds of things. And one of them is that they can use is request for comments. They can ask for comments from the community. They can say, we're taking 45 days or whatever it is to get just feedback from the community, but it's an excuse to delay things essentially. And what they did kind of at the exact same time is delayed all of the other ETF products that are kind of wanting to represent Bitcoin on the stock exchange. So we've got BlackRock, we've got Wisdom Tree, we've got a couple of other ones, we've got Fidelity, Bitwise. The SEC holded all of them. They can't hold off for too much longer though. So we're likely to see a lot of price fluctuations around October 19th, October 17th, October 16th. In that period, this is all US times, by the way. So mark your calendars, there might be something interesting happening in the markets. That being said, they've got a couple of other delays up their sleeve once they get over these requests for comment periods, and they have to start moving forward with it. But realistically, the longest they can delay all this stuff is till the end of kind of March next year. So why do people care about this type of stuff, right? Why not just buy Bitcoin? Why care about ETFs? And there's this going idea that by having ETFs, we'll make it a lot more accessible to average investors. One of the biggest issues we see in this space is people needing to hold their own funds. They don't want to hold it on exchanges because of all the stuff that's happened out there. But a lot of people, a lot of investors, a lot of hedge funds, a lot of superannuations, your Kiwi savers, people want to invest in this stuff via them, but they don't want them holding it. So this represents a way of them getting exposure to the crypto markets. And so what the thought is that if there are ETFs, because of how much easier it is to invest in an exchange-traded fund, how much more liquid they are, there'll be a lot of institutional and retail investment into Bitcoin. When there's more investment, then there is people divesting, the price tends to rise, and that's kind of the going hypothesis here. I will argue the counterpoint though as well, that a product very similar to this, that any broker, any financial broker in New Zealand or in any major financially connected nation would have been able to already invest in the Bitcoin Trust, the Grayscale Bitcoin Trust. It's just that people wouldn't have been able to do it themselves via trading apps and stuff like that. So it'll be interesting to see what effect this has. I think it's a matter of time before these ETFs get approved, but it'll be interesting to see, does this actually bring on that institutional, that retail, that mass adoption that a lot of people kind of are thinking about with these products? And also a question I'd just like to put out to you guys is this the way forward, or should we be focusing on getting people to hold it themselves, to move away from needing big institutions, to go back to those roots of crypto? They're questions I can't answer. I can't tell the future, but it raises some really, really interesting questions about what institutional players are doing in this space. That wraps up this week's CEO on the Lobster. Janine will be back next week, as previously mentioned. Thanks guys for listening in again, and as always, if you've got any suggestions for topics, please let us know below, and we'll try to get to them when we can. Thanks all. Till next time.